Welcome back. Today it's Monday, June 29th, and the market was strong on the surface, but underneath it was much more selective than the headline index moves make it look. This was really a tech and growth rebound day. The QQQs led, the SPY was strong, the Dow was up, but small caps lagged, and a lot of defensive sectors were actually red. So let's jump through the indices, sectors, and a few names and trades, the weather report, and then talk about what's coming up tomorrow. Quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more, and thank you so much to everybody who's subscribed. I really, really appreciate it. First off, let's start with the big macro backdrop from today. There wasn't any major U.S. economic data, so the story was mostly geopolitical relief and a rebound in major tech, mostly technical. So markets were responding to easing U.S. Iran tension after the weekend, with investors getting more comfortable that the Strait of Hormuz risk was not escalating into a larger immediate oil shock. The other big backdrop is that we're in a holiday-shortened week with some very important economic data coming up later in the week. JOLTS, consumer confidence, ADP, ISM manufacturing, and then the June jobs report on Thursday. Now let's look at the individual indices. SPY was up 1.65% today. QQQ outperformed that at 2.5%. The IWM was down slightly at 0.3%. The Dow was up 0.75%, and TLT was flat to slightly up at 0.1%. So the clean read is this: mega cap tech and growth were bought aggressively, but small caps were not quite confirming the move, although we could see later in the day IWM started to have some recovery. There's a lot to read into with the positioning of institutions on a shortened week where less capital tends to be allocated in general. It's not a hard and fast rule, but it's not unusual to see that. And then also the way that options are expiring at the end of the month have played a little bit into it, particularly on some of the larger cap names that have multiple expirations during the week. And we can get into that on individual names. But I was expecting a choppy session, and you could see IWM's been chopping for quite a while. And we'll actually talk about that when we do the weather report about what's going on, because we've been calling for chop for quite some time. Even though we saw some recovery today, I don't think we're out of this chop zone. And once we are, but we'll wait till confirm that. So anyway, the difference between the SPY, the QQQ, and the IWM tells me that this was not some broad everything is fixed rally, and we'll look at it when we go into the sectors. This was more of a leadership rebound in the names that had been hit the hardest, especially big tech and AI related exposure. And a lot of the reason for those moves today was the combination of geopolitical relief, a bounce after recent tech weakness, and investors rotating back into large cap names that have still been that still have the strongest earnings and cash flow profiles. So let's jump into the sectors here. XLK, the technology ETF, closed up 2.29%, really outperforming there. Should be no surprise because of QQQ. Industrials were up though, 0.75%, which was nice to see a defensive sector up there. XLY was up 2.48%. So consumer discretionary getting a little pop. Communication services was up 1.83%. XLF was up about 0.32%. XLV was up 0.17%. XLU was down though, 0.63%. XLE was down 0.52%. No surprise there. Oil taking a hit today. XLP was also down though, 0.58%. And real estate, XLRE, was down about 1%. So again, the sector report matches the index report largely. Technology, discretionary, and communication services were the leaders. Utilities, staples, energy, and real estate lagged. And that is a classic risk-on behavior, but the important nuance here is it's not a broad risk-on. It was concentrated risk. Investors were buying duration-sensitive growth and big tech, but they were not buying everything across the board. That makes tomorrow really important, because if this is real, you want to see that rally broaden out. If it stays narrow, then this may just be a sharp bounce inside a still fragile market. So let's talk about the stock stories of the day. And the first big one was SpaceX. So SpaceX continued to be in focus after news hit that it'll be joining the NASDAQ 100 on July 7th. Everybody kind of knew that was going to happen, but it's now confirmed. And it was also added to the Russell 1000 after Friday's close. So this is a major index inclusion story. And that matters because index inclusions can create forced institutional buying from funds that track those benchmarks. And it also keeps the broader space trade in focus. And speaking about the space trade, our next stock story is Rocket Lab, which jumped after announcing that it'll acquire Iridium in an $8 billion cash and stock deal. And so that's a huge strategic move, because Rocket Lab is no longer just trying to be a launch company. It's trying to become a much more vertically integrated space infrastructure and communications play. And that's why the market reacted so strongly. And we can also see that on the NASA ETF and some of the other space ETFs. And so the third big move today was Comcast. Let me pull up this ticker ticker there. And so Comcast announced a major restructuring where it plans to separate NBC Universal and Sky from the connectivity business. And that's a big media sector story because it continues the unwinding of the old telecom plus media conglomerate model. And it raises questions about whether legacy media assets become cleaner, more focused companies, or potential acquisition targets down the road. And just to look at Netflix real quickly there, we had a great pump at the start of the day, but gave a lot of it back. But that's one to be watching if you're watching the Comcast story. So the theme of today's stock stories was not just like I was talking about in the indices, that tech bounced. But the real stories were that index inclusion, space sector consolidation, and media restructuring, at least as far as the news stories go, because otherwise it was a relatively slow day on Wall Street's media channels, if you will. And so those are the kind of catalysts that can move individual names, even when the broader market narrative is still mostly about rates, macro, and tech leadership. So let's jump into the market forecast, essentially using SPY as a proxy for the market. And of course, I can't actually predict the weather, but what I can do is I can look at what regime we're in. I can start to mark out some of the levels, look at some of the technicals so that I know how to be trading and what type of market I'm operating within. So the first thing I want to do is just look at the daily here. And we're going to look at the weekly, the daily, the 4-hour, and we'll also zoom in on one smaller time frame because something very interesting happened here. The first thing to look at is that we closed near the highs into the close of the day. That's generally constructive. But I also want to point out a very interesting candlestick pattern that is happening right here. And this is going to cause us to go to a smaller time frame, which is this wick from Friday. Because this is a really great pattern in general. If you're looking to see whether there was support below you, it got bought up immediately. And a lot of people say that these types of patterns aren't real and that was like a false wick. But the volume supports that it was a real wick. And if we look at it on the 1 minute, that was the craziest part about it, was that it happened within the course of 1 minute at 12:59. And this was a news candle. It wasn't a market on close reaction. It didn't happen during that print. It happened based on some Iran news and got bought up immediately. I also couldn't get filled on this. So either the liquidity was coming from somewhere else rather than rather than Schwab. I just couldn't get filled on Schwab there. So dark pool activity or just large orders ready and waiting for this. And we're not going to get into what may or may not have happened. But what I will say is that algorithms who are trading see that as a real wick. That's a very real wick. They can see that there was that much liquidity below there, and this is a liquidity sweep. And what's also interesting to notice is that it came very close to one of our fibs here. And one other thing to notice is it came right down to a pivot point. So this is S2 down there and got bought up immediately. And I've talked about pivot points countless numbers of times. And a lot of times institutions are waiting for those levels. And so that was a really great level there, among other reasons, which we won't get into. But for the purposes of today, we can see that we swept the lows here on the 4-hour. We've continued back up. However, I've been calling for chop for quite some time here, and this is still very choppy. So this is great if you're a day trader, maybe a swing trader. But if you're longer term investing, you want to wait. Again, not financial advice, but you may want to wait to see what actually happens here. Because if we look at it on the weekly, it's still very compelling. The trend is still intact here, but we have some localized price action that's moving down. So could just be a pullback, of course. But if you're trading on the daily, this doesn't just feel like a pullback. This feels like a downtrend for sure. And if we look at it on the daily, what I don't like is that we still cannot reclaim this 20 simple moving average on the daily. We did bounce off the 50 simple moving average, so that's great. But I haven't seen the pattern reclaim. And in fact, if we look at the super trend here, we still are in a daily downtrend. So like I said, even on the weekly, you could kind of see that and know that it feels that way. And also the VIX pulled back today. If we check that out there, we could see what happened. The VIX got sold down there, but we're still not out of, it's not all clear here for me personally. And that's also because the VIX is still in an uptrend and SPY is still in a downtrend there. And so I pay a lot of attention to that because the easier trades come along when the opposite is true generally. And so that's that SPY on the daily and on the weekly. Let's check it out on the 4-hour, and then I'll show you one last thing I didn't do on the daily. So the 4-hour, we're also below the 200 SMA on the 4-hour. So even though we had a big bounce there, it's still not reclaimed for me on the 4-hour. Let's check it out on the 1-hour. I believe it claimed, yes, it did. It took back the uptrend there. So I would expect some type of pullback, maybe hitting 738 tomorrow. But again, it remains to be seen because tomorrow we're going to be seeing a lot of geopolitical news, and I'll get into that in 1 second. The last thing I wanted to talk talk about on the daily for the SPY, and so it makes a lot of sense why we pulled back here. I have my fibs from this previous breakout, but we'll go ahead and we'll draw a fib here together. So we'll do it from the low, the swing low right here that happened when the Iran situation cooled off just a little bit, and we'll go to the high here, and you may have noticed that this bounce occurred right at a fib. So it's not predestined always, but if you're watching these levels and you triangulate your pivot points and your Fibonacci retracements, there's a much more high likelihood trades that are going to appear for you. So I just wanted to point that out. But for me, however, this is still not a swing for the fences kind of moment. I'm still seeing this as a choppy price action, maybe a pullback in time. We could be in this for a little bit. However, I will say based on seasonality, it's starting to get a lot better. June is generally a down month, but July is almost always one of the best months in the S&P. So I have been scaling into some individual names that have been down, but my long-term portfolio is what's holding SPY and QQQ. And so I'm dollar cost averaging into those things on major pullbacks, but those aren't swing trades or day trades for me. The other big part of the market forecast is the macro calendar, because this is a holiday shortened week and a lot of important data is getting compressed into just a few days. Tomorrow on Tuesday, we get Case-Shiller home prices, Chicago PMI, consumer confidence, and the JOLTS job openings. And the most important one for the market is probably JOLTS, because it tells us whether the labor market is still tight or starting to loosen. If job openings come in hotter than expected, that can put upward pressure on yields and hurt growth stocks. And if they come in softer, they may support the idea that the Fed has more room to ease. Wednesday, we get ADP private payrolls, final manufacturing PMI, ISM manufacturing, construction spending, and auto sales, and a speech from Fed Chair Kevin Warsh, if that wasn't enough. And the big one there is ISM manufacturing, because it gives a read on whether the industrial side of the economy is accelerating or slowing down. ADP also matters, though, because it gives the market a preview, even if it's imperfect, before the official jobs number. And then Thursday is the big event, the June jobs report at 8:30 a.m. Eastern. So very early if you're on the West Coast, like I am at 5:30 a.m. So we got to get up to make our money, of course. And so we get non-farm payrolls, the unemployment rate, hourly wages, weekly jobless claims, and then factory orders later in the morning. And that is the number that really moves rates, the dollar, TLT, the Qs, QQs, and the whole risk on trade. So for the rest of the week, the market is basically asking one question. Is the economy strong enough to support earnings, but not so hot that it forces the Fed to stay restrictive or even get more hawkish? And that's the balance. Strong but not too strong is bullish. Weak but orderly may still be okay if it brings yields down. But hot labor data with sticky wage growth would probably be the most difficult setup for tech growth and rate-sensitive trades. Let's check on the trades we've been covering on the channel, and please leave comments. Each day I'll cover as many requests as I can here. So the first one I want to talk about is Microsoft. So Microsoft, we had been watching. We've been calling it out for RSI bullish divergence here, especially on oversold conditions. So personally, I'm very invested in this, just in full transparency. And today we had a pullback that we expected. So what we had called out was this bullish RSI divergence, which happened right at a level of previous support with a liquidity sweep right below it. So not an unusual pattern to see, and also forming a morning star pattern. And then we also saw it on the 1 hour here. And so this is important. I covered it in a video over the weekend where I was explaining RSI divergences. So check that video out. But when we look at it on the 1 hour, and I need to also turn off my show extended hours. I have that on while we're just talking today. But right here, we have this beautiful morning star. And we talked before about how you need to have extended trading hours off to see the hourly that forms at the open of the regular trading hours. But this is a beautiful reversal pattern. And that happened during that sweep of liquidity that we were talking about. And so this is a great pattern to see. And for me, this really is that line in the sand. So I could see that if we come below this low, a lot of the assessments I made based on that RSI divergence are not holding true. And that's very important. Again, this is not financial advice. Don't listen to anybody's trades on YouTube because you don't know what their risk tolerance is, where their entries, their exits, their stops, all of that stuff is. And also they shouldn't be giving you financial advice. They should just be assessing the markets. But for me personally, my most recent trades are tethered to this to prove my thesis. So this is great. And a lot of times when you get these Morningstar patterns, patterns, and you can actually see it here. It comes back down into it to test it, and then if it gets bought back up, it's holding, and now that pattern is correct. And we also broke out of the hourly trend here, but we're failing to break out of the 4-hour trend if we see that. So here's my super trend. We still are not out of the 4-hour, but we're starting to challenge it, and this is the first time we've touched the 20 SMA on the 4-hour in a very long time. So it's not really that surprising that we got rejected right there. However, I did put on a new fib starting at the swing low here up to the top of, I believe this was today's move, because in the pre-market or after hours on Sunday, it was really flying. It was great. Not very helpful if you have a lot of options trades, but if you are in shares and you are trading with a broker as 24-hour EXTO eligible, like Schwab does on Thinkorswim, you could have benefited from that move. But we're not out of the 4-hour downtrend yet. We did have a 1-hour, and a lot of times what happens is that first reversal that you're going to get, you might oscillate a bit unless you're just going to have a huge V pattern, but I don't quite expect that. So this pullback wasn't unexpected for me for today. Also, if you look where we came into, it came right into our pivot points right here. So that isn't unexpected either. In fact, we added a few more shares of MSFU at that point. And we had another liquidity sweep right here. And you could see that was, if you look at it on the 1 minute, this was another one that looked a whole lot like I was talking about on the SPY, where you have this phantom tail. Sometimes people think those are broken prints. Just depends when they're happening and how they're happening. I'm going to take this one at its word here. I believe particularly that if we bring back extended hours, there was a pivot point closer to there. Because again, remember, if your pivot points, at least in Schwab, this indicator is different depending on if you have extended hours on or not. I am going to turn that off for the rest of this though. All right. And so that's Microsoft there. I still have a lot of conviction in it, but I don't think it's going to be just a blast to the sky. I really need to see us get above this neck. It's not truly a neckline really, but I need to see us get above 373 here with strength. And I'd love to see reclaiming 380. I do think what's happened is we came up into this, and this was overnight, a lot of it, because we were up higher in the overnight. I have it off. That's why we gapped up here. And I think people who wanted to take some of the profits from this lower trade were getting out. So I don't see this as a dead trade. I see this as actually what I was expecting to happen. So now let's jump into the next one we're watching. All right, next let's look at Uber, because it's a play we've been in. We had a lot of long call options. We took some off on Friday when there was a big pump because of the news about congressional trading on it. And we like to have multiple call options so that whenever there's a large catalyst, we can take off some of them and then have the remaining runners funded by that original catalyst pump. Again, not financial advice. This is just how I trade the markets. And so we took off some risk on Uber, but are still in it because the GEX was still largely positive to it. And we're looking at the 80 strike as the next potential upside. And you can actually see there is a strong fib and support level there. It's also a loss of a previous level. And so it's something we're watching. But again, the runners are just waiting for that. If we come back down and retest this 73.50 level and are able to reclaim it or bounce off of it, I may go in with another call option for it. So the next one is American Airlines, and this is a very similar story where I was holding a number of call options, took them all off today because the move was so great that we wanted to close for a profit there, and we're going to re-enter if we drop back down into this previous point here. Let me take that tool off. Basically, if we come back down into the 1650 range, I'd be interested in some longer term call options. Essentially though, again, not financial advice, but one way, and I like to give you guys value if I can. When we have a retest of a breakout like that, oftentimes I will go in with a call spread so that if I'm incorrect, I'm limited on it and it's more capital efficient. But essentially, I often expect there to be some overshooting of a retest. And when that overshoot happens, I'll look at the technicals. And if I say this is just an overshoot and everything looks good that we should recover, that's the point at which I may take off the short leg of my call spreads for a little bit of profit. And if I'm incorrect, I can hold it longer because it's a long dated call spread until I start to see some bullish activity. So that's how I generally trade those. Or sometimes if I really want the stock, I'll wait till it comes back down there and then I'll sell a cash secured put much further down at the next support. So that's also a perspective there. But American Airlines is still looking very good. If you haven't watched some of my other videos, I called it out on the weekly here for a few reasons. One, it broke above that trend line. And then also you're starting to have a crossover right here that I liked. And I believe we also saw it on the monthly. If if we remember. Oh yeah. Okay, so on the monthly, we've broken out of this super trend that occurred since 2019. So I really like this as a long-term play, and I think there's a lot of upside there. But I want to see a little bit more motion there. This is a good one for the add for the long-term portfolio for myself personally. So I'm starting to build out a position in that with CSPs, cash secured puts. We may not get assigned on them, and they don't actually pay very much. So those are things I definitely want. So now let's jump into the next trade. Next, let's look at Amazon. A lot of users have been asking about it. Amazon was kind of a standout today. So on the monthly, just real quick, it's looking good. It's surfing the 20 SMA. The big reason we follow those, as you see during the bear market in 2022, when it was below, it wasn't a good time to trade it. But once it came back above, that was a great time to trade it. But let's go back into the daily because it was kind of a standout today. It was up 3.2%. However, there was a lot of rejection that happened. So we ran into a lot of supply, which is actually a very interesting point to me because even though this was up so much today, it's not enough for me personally. I'm actually not in Amazon at the moment. I've been starting to acquire some longer term positions through cash secured puts. So I guess I am in Amazon in that sense, but I'm not playing any immediate swing trades, just riding it to collect some price, playing theta essentially for some very long dated options. But Amazon did do well. This is kind of what relative strength looks like as far as a gain, 3.2% compared to QQQ, which was up 2.4%. 2.49. And so on a big tech rebound day like this, Amazon actually behaved like the leader, or at least one of the main leaders there. But the key is really if it can hold this 240. And you could see it's having a hard time doing that. And also, again, we're on the daily. It got rejected violently here by the 20 SMA, and it's now between them. And I also don't love that the 200 here is starting to flatten a little bit. You always want to, not always, but it's a lot more convincing when it's angled upward. And then when it starts to flatten, you have to start thinking about what might be happening here. However, I do think personally, just anecdotally, based on the assessment that I've been making over the last few weeks, that we're going to continue to chop in this range. However, I'm also very interested personally if we come back down into the 210 range because I do have some cash secured puts on it. So I'm watching that very closely. But for intraday swing trades, I would actually just want to be watching it on the pivot points. If we go in closely here tomorrow, I'd be most interested if it comes down into the 225 range or really into the 220 and do some type of liquidity sweep. Everybody who got excited today would probably be caught off guard down there. And so we'd have some kind of cascading. Likewise, this may be the first prod in to see how much supply is up there. So I'd be watching that closely if we can reclaim this level. If we can reclaim the daily uptrend on the super trend, that'd be really great. We've reclaimed it on the 1 hour. And that's another reason I'd be interested in getting in for a swing trade if we were to come down to this lower range here. But again, watching that 233 all the way down to, if I could really have my cake, it would be at the 222. All right, so let's check out the next trade. So the next trade is ServiceNow. So now closed at 99.97. Was up 1.66%, and that's a pretty decent bounce, but it's not perfect. It hit a high around 103.18, then faded back to under $100. So the bulls did make progress, but they didn't fully control and hold it. So for now, I'd be watching the 98.50 to the 100 level, and as you can see, based on tomorrow's pivot points here and some of how they're lining up with some of the fibs, it wouldn't be surprising to me if we came down to 93. And that's actually a very interesting level here because we have this fair value gap that could be retested. If we were to come down to here and bounce back off of it, I would actually really love that as a trade. And I'm already in this name. I'm highly allocated to it, but it is a longer term play. And for me, this is something like Microsoft, where essentially what I'm looking for is confirmation that every bounce isn't getting sold off. Now, you could see this on the daily. This is one of those interesting candles where we're up 1.66%, but it's a red candle. And that generally means that we found a whole lot of resistance up there. And so I'm watching it closely, but the fact that there was no breakdown further does build some conviction to me. But what I am saying is I wouldn't mind seeing this gap filled here. And if we came back down to 96 or even to 93, that would be fine. And this candle here, this fair value gap, if we were to come down and test it and then continue upward, I'd have even more conviction in it because it meant whoever was buying it at these levels is continuing to buy it. They see a lot of value in it below $100. And that's what I want to see because I and retail traders in general do rely on institutional investors to move the price. So we want to see what their appetite is at these levels. And I am seeing a lot of interest down here below 100. And so what I'd like to do is see that continued interest there for institution. So another trade we were watching was CRM. A lot of people have asked about it. Of course, software has been down, so a lot of people are asking about software names, and I'm also invested in this. I think there's great value down here, and we saw something happen on this on the daily, which is really compelling, which first called it out because it was doing it a lot better than some of the other names, which was this bullish RSI divergence, and you could see it continuing over days. I believe it may have even hit on the weekly. Let me look. Yes, it happened on the weekly right here. So it's great. And it's happened multiple times, a longer term RSI divergence. These tend to be very strong. But essentially you can see here that we have a trend line. This is your lowest low on the RSI. And here it's trending upward from the lows. So a higher low, whereas price is making lower lows right here. So that type of and you can see I already marked one out previously. This type of bullish RSI divergence, especially happening on multiple time frames, is very compelling to me. And then we also saw it happen in real time that we had another Morningstar pattern right here. This is a really interesting one, just complete brick walling. It's just hitting what I would assume is absorption. Right below the point of control, institutions got in or just kept absorbing it. There wasn't high volume going on there, just couldn't break through. And there was a sweep of it previously. So that kind of Morningstar candle reversal pattern to me is very strong, especially when it occurred with RSI bullish divergence. So this is one we've been in, but what did it do today? I guess is the question everybody's asking. And today it had a down day. It was down 0.28%. So it didn't really participate in that tech-led rally, which is not surprising. Software wasn't in general, but it does tell me that more buyers are still hesitant in the software space, which is interesting, even after this bounce. So I think we're going to continue to consolidate down here. So what that tells me is that maybe I shouldn't be looking for a huge bounce right away. I should be looking for a pullback down into here. And I actually wouldn't be surprised for similar reasons if we came back down to test some of these areas again. Maybe if we look at this on the 4-hour, see if there was any gaps left over. No, this is getting a little bit smoother, but we still need to break out of the 4-hour before I see a very large uptrend starting. But just adding to my position on that occasionally. And now let's look at the last name for the day. So then that last one to talk about is Bitcoin. And we can actually look at the futures because they were doing really well overnight. We did a Sunday night play on them. We did a video a week or two ago about it when we noticed, it was a weekend video, it's not a market recap, when we noticed the RSI divergence on this name. And you can see it here marked out very nicely. Our thesis was to get in around here, to exit if we get stopped out here. So we got stopped out somewhere around here, stayed true to the trade. But then we saw the liquidity sweep happen last night. And now we're getting some more bullish RSI divergence you can see here. And this is on the daily because now we have even lower lows and the RSI has a higher low there. So this looked good to us. That doesn't mean that it's going to V-shape immediately, but we liked a lot of what was going on here, and it's a risk-defined trade. I said it in the Bitcoin video that I covered. This will probably be a number of paper cuts trying to get in, but I don't mind it going into, say, September, November, something like that, where we think that the crypto cycle is probably going to turn around. I'm not going to cover too much crypto here, but this is a good asymmetric upside play for me personally. Huge thanks to everybody who subscribed, commented, and liked. If you're new here, I do regular market recaps, new trade setup ideas over the course of the week, and some really deep technical dives. And please leave a comment, any names you want to see. And also, if you'd like me to go further into some of these technicals, I'm trying to cover a lot of names, so I can't do everyone super deeply and do a full technical analysis, but let me know if you'd like that, and we can go deeper and deeper into just a specific number of names as opposed to a larger swath. And if you're new here, please subscribe. It really means the world to me. And if you've already subscribed, thank you so much. It's why I make these videos. And if you leave a comment, I get back to everybody. So thanks so much. Happy investing and stay safe out there.